Hello guys, welcome back to ESENtaxa. Andrea here, and in this specific video we are going to talk about Bulgaria, a new jurisdiction in Europe that we are going to discuss in this channel. Now, if you're new in this channel, if this is the first time for you watching our videos, ESENtaxa talks about how to optimize your taxation if you want to move in a specific country, if you want to relocate in a specific jurisdiction, and you want to understand in advance, tax-wise, if the relocation makes sense for you or not. For you means for your business, for your companies, for your business structure, your family structure, your type of incomes, your worldwide incomes, and you want to understand actually if I'm choosing that specific relocation because I want to pay less taxes, because in my country I pay too much taxes, I don't like it at all. I want to change. I want to see if I found a new, better life with more money in my pocket, simply pay less taxes, and I want to understand tax-wise indeed if this relocation makes sense. You don't take into account only the cost of living, only the environmental situation, which is extremely important as well, but also taxes, which in certain countries they bite you half of your money, half of your earnings, okay? So in this specific video, I just want to start to talk about Bulgaria, and here I want to focus on a specific case study that happens to our client, and we have analyzed also the convention to a double taxation between Bulgaria and the other countries from which our clients were coming from, because they were looking at Bulgaria. Why? Because Bulgaria has only this famous 10% flat tax on personal income. So in Bulgaria you have only one tax bracket rates, which is very attractive, simply like that. This is not a specific general or specific tax regime that we have in other countries. For example, in Italy we have the impatriate tax regime that allows you to pay less taxes, in Portugal NHR, in Spain Beckham law, in Belgium expat status, Netherlands a similar tax regime. So in several countries where the taxation is quite high, we have a special regime to attract individuals or also companies. But in Bulgaria this doesn't happen, because we have this 10% flat tax as personal income tax, and also 10% as a corporate, so corporate and also income tax. Okay, so it's very simple, straightforward, easy to remember and easy to apply. And then if you want to be a freelancer, you pay 15%, freelancer or self-employed, okay, or self-employed. And if you have a company in Bulgaria, if you incorporate a company in Bulgaria, you pay 10% of corporate tax, it's fine, plus 5% dividend. So in the end, you're going to be subject to the same taxation as a freelancer, so around 15%. So as you can see, this is one of the best and tax-wise, the less tax pressure regime in Europe, with the standard tax rate. Standard means by default. When you become Bulgaria tax resident, you get this low taxation on worldwide income, because Bulgaria also is a country that taxes you on your worldwide income, okay? So all your worldwide income will be taxed at this percentage when you become Bulgarian tax resident. Okay, so basically what happened is that a lot of clients are asking why I cannot move to Bulgaria. Straight, easy. I just have to go there, spend more than 6 months, rent a home, purchase a property, easy, and then basically I start declare my taxes in this way, or simply open a company, or I become a self-employed, I open up a Bulgarian VAT number and I start trading and I start doing my business providing service from Bulgarian territory, okay? And basically this is the classical question that a lot of clients are asking us, but the problem that a lot of people are not aware of that in this country there is a big catch. And what is this catch? Okay, and I'm trying this video to explain you as well as possible. It's a little bit technical, but I'm trying here to be clear, and also for you guys that you're not familiar with the double taxation agreements, which is the focal point of this video. I'm trying to be I will try to explain in an easy manner, okay? Let's just with some, I'm going through some example and I help you to understand the concept behind it. And why, in the end of the video, you will understand that this jurisdiction, with certain jurisdictions, because we are always talking about when I'm coming from a jurisdiction towards Bulgaria for this specific video, for certain jurisdiction there is an agreement that has some pitfalls or loopholes, if you want to call it, and this might be a disadvantage for you in certain scenarios. Okay, so what is the problem? In general cases, imagine you are coming from Spain, or you're coming from Germany, okay? You're coming from France, you're coming from Italy, okay? They have, those countries in Europe, they all have high standard taxation level, so they tax you at 30%, 40% if you have a big incomes. And you want to move to Bulgaria, okay? So this is the classical scenario. Now, as both countries, all of those countries there belongs to European Union, and with each other, between each other, they have signed an agreement to avoid the double taxation. What does it mean? It means that if I want to relocate in Bulgaria and I want to pay taxes here, but in my country of origin I still receive certain type of incomes, basically, for example, rental income, so territorial income, as incomes that I produce in that country, like rental income, as I was saying, or I have dividends, or I have interest, so some kind of incomes coming from there, those type of incomes will be still subject to taxation on those initial countries. And even if I pay 10% in Bulgaria, okay, I will be still subject to a withholding tax on the country of origin. But, of course, there is a DTT, double taxation agreement, that allows me to pay taxes twice in Bulgaria and in my country. Bulgaria normally uses a very nice strategy to avoid the double taxation using a method, in most of the cases, which is called exemption method. It's not a tax credit method, but exemption method, which means that if your taxes are, if your income is already taxed in your country of origin, Bulgaria doesn't tax to you, so you don't get taxed at 10%. Okay? This is how it works. Other countries instead, they use the tax credit method, so they simply subtract what you have paid in your country of origin against the tax that you're supposed to pay in the country in which you moved. Okay? So, thanks to the double taxation agreement, you pay 10% in your income produced in Bulgaria, and the taxation that normally you're supposed to pay in the country from which you have originated your income. And if you are non-resident of Spain, non-resident of Germany, non-resident of France, and non-resident of Italy, you are subject on dividends or capital gains interest at a lower withholding tax for non-tax resident people, which is your status now because you moved to Bulgaria. For example, Italy apply a 26% standard rate on dividends, for example, but if you are not Italian tax resident, you will get at 15% tax rate because it has been established in the double taxation agreement. Okay? So far so good. The problem is that in the double taxation agreement, is it also specified the meaning of tax resident. So in this document is also specified when you are tax resident in Bulgaria or when you are tax resident in your country of origin. Okay? And you have to respect this requirement, because if you're not considered tax resident for the convention, you cannot get the discount on your withholding tax. And the problem with Bulgaria, and this is the catch, and this is the real topic of this video, is that inside this document, a Bulgarian tax resident in most of the cases is not just somebody that lives in Bulgaria for half of the year, more than half of the year, but is somebody that has the Bulgarian nationality. Okay? And be careful about this point, nationality. So, Bulgaria have signed towards several countries a document, which is the taxation agreement to avoid the double taxation, in which Bulgaria established the resident if somebody also has the Bulgarian nationality. Okay? So if you move to Bulgaria and you're not Bulgarian national, of course, maybe you're going to be in 5 years, 6 years, or whatever times is needed to be Bulgarian citizen, you cannot apply the DTD between Bulgarian and your country, if Bulgaria and your country have established this kind of DTD with the national word, which is very weird, it's a very peculiar thing, but it's what exactly happens if your tax consultant or your tax advisor doesn't read carefully each and every paragraph of the convention to avoid the double taxation. And this is a big consequence, because then this DTD, this double taxation agreement, cannot be applied. You are not subject to the reduced discount withholding tax for non-resident, and basically you become Bulgarian tax resident based on the Bulgarian national law and not on the DTD, because the international tax agreements, they are at the top of the national laws. If this document cannot be applied because you're not national, so this document doesn't exist basically, or cannot be applied, and then you basically have to rely on Bulgarian national law, and to avoid being still tax resident in your country of origin, you have to make sure to respect your country of origin's tax laws of Germany, on Spain, or France, or Italy, in order to make sure to be non-tax resident. And at top of it, you won't be benefit from your reduced withholding tax. Okay, and also if the DTD, this document, is not applicable, if you're not national, as a Bulgarian national, sorry, it doesn't work also when you want to move there receiving your pension tax-free. This doesn't work. It doesn't work for dividends, reduced withholding tax. It doesn't work for capital gains, reducing withholding tax. So basically what happens is that if you want to move here, pay 10% taxes, it's still fine, as long as you respect the national laws in order to lose the tax resident in your country of origin. It's fine. But when it comes to receiving incomes from abroad, well, you have to make sure that this convention that Bulgarians signed with the country of origin has or doesn't have this national requirement, which is basically a rare situation, but Bulgarians basically sign it like this. Maybe in a different country, with a different country, they have a different agreement that has been signed maybe in a recent time, and this kind of phrase, this kind of constraint doesn't exist. So that's the reason why, and this is a clear example of how the double taxation agreements are extremely important. How be careful about this jurisdiction with only 10% flat tax, with lower flat tax, because they might have something hidden behind. And if you don't make the right calculation and write a tax simulation with the right tax consultant, you might risk to have all your relocation to these countries completely screwed up because of high taxes that you didn't expect to pay. Okay? So we do this in ESENtaxa whenever you need to move into a specific country, jurisdiction in Europe. We check carefully the convention to avoid the double taxation to make sure if the relocation makes sense tax-wise. And thanks to the tax simulation, this is one of the services that we offer, we make you understand, you will understand clearly with numbers if the relocation to that specific country tax-wise makes sense or not. As you can see here, the Bulgarian example is the nice trap in which we always say to our client, the devil is hidden in the details. So, if you like this kind of content, if you want to be always updated with ESENtaxa, just subscribe to the channel, notification bell, a like button in order to see popping up on your screen new videos about this kind of topic. See you to the next video. Bye.